Friday, November 5th, 2021, Monaco 64, home of alternative economics and contrarian views. So November 5th, it's a fireworks night here in England. It's a Guy Fawkes night, if you want to call it, or it's the anniversary, 416th anniversary of the gunpowder plot. We're going to quickly look into that. But today, we're going to look at also the Bank of England, which was, of course, established about 90 years later after the gunpowder plot in 1694. But yesterday, the Bank of England made a major misstep. They perplexed, they confused the markets. The markets expected the Bank of England to raise interest rates from a measly 0.1 to 0.2 maybe. And they didn't, even though inflation is running hot. It's almost at 5%. If you look at the measurement that counts almost everything, RPI, and even that is manipulated lower, of course. But yeah, I think the Bank of England might be the first central bank to blink, even though I think Mr. Powell blinked the other day. But it could be the first central bank to fall. And by that, I don't mean it's going to be closed down or anything, but it could lose massive credibility. So we're going to look at that before. Let's look at the gunpowder plot, what it really was. So Wikipedia says the gunpowder plot of 1605 in earlier centuries called the gunpowder treason plot or the Jesuit treason. And it's interesting that it was a Jesuit treason. And it says, was a failed assassination attempt against King James I by a group of provincial English Catholics led by Robert Catesby, who sought to restore the Catholic monarchy from the Church of England after decades of intolerance against Catholics. So the plan was to blow up the House of Lords during the state opening of Parliament on November 5th, 1605, as the prelude to a popular revolt in the Midlands, during which James' 9-year-old daughter Elizabeth was to be installed as the Catholic head of state. So yeah, Billy doesn't like November 5th because of the fireworks. He gets quite nervous. Hopefully he'll be okay tonight. But yes, so it's affecting Billy even today. So it's an interesting date. And it's interesting that it was a Jesuit plot. And I've seen many of you comment in my videos that the Jesuits are in charge. You might have kind of a point. And but I think there's a lot more groups that are in charge as well. The Jesuits are part of the New World Order, I think. They're more involved in the educational system. But for example, if you look at Mark Carney, who's heavily involved now with COP26, who was governor of the Bank of England. He went to Jesuit schools. Mario Draghi, ex-Goldman Sachs, head of the ECB, now Prime Minister of Italy. He went to Jesuit schools in Rome. The Pope right now, he's the first Jesuit Pope. So who knows? But it's an interesting date anyway. And hopefully there won't be too many fireworks, even though I think there will be. And they will go on during the whole weekend. And we'll just need to keep Billy calm. But anyway, yes, gold and silver did very well yesterday. Not only in dollars, but in pounds, because the British pound got hit really hard. It was down like 1.5%. It traded almost like a emerging market currency or a banana monarchy, because we're not a republic, banana republic currency. And there was also news yesterday, political news that was quite interesting. It was the first good news from Boris Johnson I've ever heard or have heard in a long time, was that they reversed the decision to not punish one of the MPs for corruption. They call it something else, but they call it sleaze, but it was corruption. He basically got paid by loads of companies to influence legislation to help these companies, and he got paid a lot more than his wages for being an MP. And I think it was Wednesday evening, Parliament, with the majority Conservatives, voted not to punish this guy. And then yesterday, Boris Johnson reversed the decision and the MP actually resigned. That's good. You have to fight corruption, or sleaze if you want to be more euphemistic. But back to the Bank of England. This is a sign here. If you look at the price of gold in British pounds, it's starting to break out. And that's why I've told people, when will gold go up? They ask me. And I say, well, when the currencies collapse or sink precipitously versus real money, because that's what gold and silver are. And we're seeing here the British pound, or XAU GBP, starting to move lower, or gold starting to move higher. And we've broken some key technical levels here, but we still have some resistance ahead. But as you can see, it's been trading in a range for a long time, but it looks like it's breaking out. And I think it's got a lot to do with the central bank, or the Bank of England, not being determined to fight inflation or stop inflation, because we all know that it's the central banks that create the inflation by creating reserves or money out of thin air, or even, as the Bank of England founder once said, his name was William Patterson, and I'm quoting him. This is in 1694. This is one of my old mugs about shutting down the Bank of England, and it had the old lady of Threadneedle Street. Unfortunately, I can't sell this anymore because I had bought the rights to this for about a year, to this picture. But this is what William Patterson said, one of the founders of the Bank of England. The bank hath the benefit of all interest on all monies which it creates out of nothing. William Patterson, one of the founders of the Bank of England. So, yeah, the problem is you need to keep your credibility, or else you won't be able to keep doing this. There will be a major revulsion against the currency, and I think we could be on the way to that. But back to the Bank of England. So this is what the FT says this morning about the Bank of England. BOE governor struggles with his messaging on monetary policy. Well, we've heard now that really central banks are propaganda institutions. They're trying to keep a perception. So this is quite euphemistic, struggles with messaging. I think it's more like losing credibility. But of course, the FT, which is a mega globalist fiat currency institution, would never say that. They're trying to help him out. Yeah, it's the same FT that wrote an editorial with no name attached to it back in 2004 that gold was finished, right? I've spoken about this many times. Going gold. The pointless of holding bullion continues to sink in. I've gone over this many times. So yeah, you got to be careful with the FT, with what they say, because they're very biased towards the central banking cabal, biased towards the City of London, because they get paid by them. They get their revenues from the financial sector. But anyway, it's very interesting. I've gone through the article, and they're going through all the lame excuses he gave, because the market was really expecting a rate hike yesterday, not for raising rates, even though they're forecasting their measure of inflation, which is CPI, to go to 5%. As I said, RPI is already up there. But I'll just go to the end here to see what some of the people who work in the financial sector in London said. So we've got David Page, economist at AXA Investment Managers, said the overall message on interest rates from BOE officials was they have to act, but not quite yet. Many in financial markets, especially those traders who have been caught on the wrong side of a bet on immediate rate rises, were unconvinced by the BOE's latest pronouncements. I think that's an important comment there. The BOE is losing credibility. Alan Monks, economist at JP Morgan, said Bailey's comments over the past month had created unnecessary market volatility. Yeah. Colm Pickering, economist at Berenberg Bank, said some of the BOE governor's comments had been very puzzling. Well, there's the credibility side of it. While Martin Beck of the EY Item Club called the guidance that rate rises would be needed in coming months a vague formulation. On Thursday, however, financial markets roughly seemed to take in the BOE messages. Well, by financial markets, they don't mean the price of gold going through the roof in pounds. I think we were up more than 30 pounds. They mean the fact that interest rates have remained quite steady. I see that the 10-year yield now is back below 1%. And that is just another indication of financial repression. They're going to keep punishing savers. They're going to keep punishing the general public with more and more inflation. And that's why you need to try to get physical gold and silver as much as possible, as I've said many times. And I'm not advising people to do that. I'm just saying that that's my opinion and that's what I've been doing. And people have asked me where to get gold and silver, and I've given them my view on that you need to do your homework to try to get the best price. But I've also got my promo code with Gold Investments, and they will match any price anywhere in the UK, and they will deliver promptly as well. So if you're in the UK and you're looking to do that, look below in the description for the details. And there's also Glint as well. So it says many traders think the first interest rate rise will now come at the MPC's December meeting, but are far from sure about this, with some betting on February. So it's not even now the credibility or the fact that they might raise it. It's the fact that it shows how scared the Bank of England is of raising rates from 0.1. Yes, not 1.0%, but from 0.1 to 0.2, which is still almost zero. And I think that's the main message we need to get from what happened yesterday. So with that, let's quickly look at where the markets are this morning. It's 8:15 a.m. London time. We've got spot gold at $1797.50. It's up about $5.50. I saw the high yesterday was 1799, almost 1800. The high this morning or overnight is 1798.70. Of course, that 1800 level is going to be a key level. It's a round number, and yes, it's an important number. If I'd have to bet, I think we're going to break that level later on today. And once we break that level, it's going to accelerate quite quickly. But I could be wrong. The low has been 1790 overnight. Silver is up 12. Yes, we did get back above 24 yesterday. Right now, though, we're at 2390, right near the highs, and the low has been 2374. Quickly run through the stock markets. The futures, the Dow futures down 2 points. NASDAQ, 100 is up 7. S&P is up 1.5. And the FTSE is up 10 points, just below 7,300. To the currencies, as I said yesterday, the pound dropped, I think, over 2 big figures, which is quite a lot for a major currency. Right now we're down another 0.2 at 134.70. The euro is unchanged at 115.55. The dollar is unchanged versus the yen at 113.79. And the dollar is up slightly, right around 640 versus the yuan. Aussie dollar is down 0.2% at 73.86. The dollar is unchanged versus the Canadian dollar, 124.58. And the Kiwi dollar is down 0.2 at 70.87. So we are seeing dollar strength, and despite that, we're also seeing dollar weakness. How is that possible? Well, the dollar is strengthening versus other fiat currencies, but it's weakening versus real money, i.e. gold and silver. To the commodities, we've got WTI crude up almost 2% at 79.36. So yeah, WTI crude has corrected quite a bit, but that's how commodity markets operate, a lot of volatility. High-grade copper is up 1% at 435, and we got natural gas down 2% at 563. Just to finish off quickly, look at the bond market. As I said, the 10-year gilt yield is down 3 basis points at less than 1%. It's a totally manipulated bond market. Yields should be higher than 5-6%, but that's the way it is, and that's why you need to be in gold. There is no return on your fiat currency savings right now. They're basically confiscating it by the back door. That's what they're doing with their inflationary policy. What about the 10-year yield? Let's quickly look at where the 10-year yield is. And I think it's the same kind of story. What's the point of having a bond that yields almost nothing in a currency that's losing value, right? Yeah, they might be able to keep a semblance that there is no inflation because they're manipulating yields lower, but we know that the currency is going down the toilet. So the 10-year yield is, yeah, it's come back off. It's at 152. I think we were at 160 after the FOMC. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Rumble, Twitter, Facebook, and all these other platforms below here. I wish you all a great weekend. Take care. Bye.